Welcome back to the channel of Truth, Trust and Transparency. Today we have another deal review. First one submitted and sent in via email. So I want to attack and break this down like we usually do. Important thing to note, guys, I think as well before I dive into this one. If you're finding really good value in these, would appreciate it if you smash the subscribe button. Trying to get to 2,500 by the end of the year. So we're growing and building off that. The next is going to be like... I'm not particularly, the best part of not being a buyer's agent and trying to sell you guys on anything is that I don't have any sort of biases towards any particular area. I will just let the data do the talking. I'll give you my overview. You got to remember with these sorts of deal reviews as well, I get sent them and sometimes I do them daily, is that there is another level of longer research required, and I'm maybe spending 30 or 45 minutes just quickly looking into something, setting up the tabs and going through somewhat high level, but I think there is still good value there. So without further ado, let's jump into this one, shall we? Now, obviously, if you've been following property investing and been following property in Victoria market for long enough, you'll know that Mildura has had quite a great run. And the time to get into Mildura was probably a few years ago. However, let's review where it's at now and what my thoughts are in terms of the data. And we'll see if this is a deal and who I think it would be suited for. So I'm on hashtag as per usual. We can see here typical price of 480. So still sub 5. In the last year, it's done 7%. In the last 3 years, it's done 19%. In the last 5 years, it's done almost 50%. In the last 10 years, it's almost done 104%. So what we can see here is that it is a great performer over 1, 3, 5, and 10 years. Let's jump into a bit more of the data, shall we? Okay, so as I said, typical price is 488. 3 bedders around that sort of 495 range, and 4 bedrooms around that 620 range. So I can remember days when Mildura was sort of mid 200. So it's obviously had that good run, which we can see in the data. Low risk, capital growth score, RCS score, not too bad. Great for cash flow, obviously. Now, Mildura, compared to a lot of these deal reviews that I've previously done, is a lot more established and has a larger size. That's going to be incredibly important to remember when we review the rest of the data. You have close to 20,000 dwellings and 35,000 population. Remember that for me. When we look at the typical price, we can see, consistent growth. Obviously, sales in that sort of 2015 period jumped up quite a lot. Median rents have been quite consistent, and obviously yield comes down as price goes up. Growth rate cycle, as we can see, apart from sort of a couple of years here, very 10, 15 years ago, it has been quite a steady performer, albeit ups and downs. But if you're looking for 4 or 5% consistently, it's done that over the last 10 years. In terms of the fundamentals, now it's a low URSAD, it's 2 URSAD, and there's 37% rented to owner ratio. I always look at that and I think, obviously, the lower socioeconomics, lower socioeconomics and demographics of an area, if you think about it, you're going to have people that have less money in those areas, and that means that there are more renters in that area. However, not a huge issue. We've seen and we've looked at areas that have been 40, 50% in terms of that renter to owner ratio. So 37%, little on the high side, but not something we would shit the bed over. Annual sales, one thing I want to point out here is you're looking at 587 annual sales. So if you were to do a bit of quick maths, you're looking at about 48, 49 sales a month this particular area, because remember, you have 20,000 houses there, 20,000 dwellings, and a huge rental volume. The demand is quite clearly 3 bedders. And one thing that is still, despite this huge run that Mildura has had, is it still remains quite affordable. Now, the question that I'd always have when we do these deal reviews is, how can prices continue to rise if it's at 45 years to own and it's at such a low price point? However, here we're sitting at 28 years to own. So it tells me there is still quite a long gap to go between 28 and say 35 regarding price growth and the affordability. So here I'm looking at Mildura and I'm saying 3 bedrooms is what we're after. And it's quite obvious that it is still affordable for the people in Mildura to be able to buy there. And if residents can buy there, that's what we want to see. We don't just want to see investors piling into an unaffordable area because, yes, you have that competition because buyer's agents often overpay, but we don't have longevity in that sort of market. So here, I'm looking at that saying it's affordable. Now, we'll go back down and say stock on market. Stock on market here, if we look at this graph, it is quite balanced, right? It says short-term high, but over the last 5 years, stock on market has been balanced. How is that balanced? Well, when we did that calculation of 587 annual sales divided by 12, 0.3%, we have 48 listings on market, meaning we have inventory of about 1 month's worth on the market at the moment, which is extremely balanced and good. If that is blowing out again and again and again, and it's 3 months on market, then we're looking at warning signs. But 1 month market, remember this is a suburb that has 20,000 dwellings in it. So there's only 48 listings, 0.3%, not a bad issue at all. Inventory's creeping up a little bit, but if we look at what that difference is, we're talking between 0.2 of a month, so not a huge issue. Building approvals, there is quite a few building approvals. I just want to dive into maybe 3.7 million tells me as a ratio 64 approvals, 0.4%. So it's below where we sort of would take a rule of thumb. Really cool thing as well, hold period is over 9 years. So it's telling me people are getting in there and staying in there, which is cool. Days on market is still at 32 days on market. So this is, if I was to summarize what I'm seeing here in this Mildura market, just purely from the data, we know it's had its run. However, it still remains affordable. There is a balance in terms of the stock on market and the days on market, because over the last 5 years, if we look back here, 35 days, now last month was 34 days, we're down to 32 average. It is quite a balanced market. Now, the one worry that I have, with a market this big, obviously, is going to be vacancy rates. Vacancy rates has been creeping up the last sort of 12, 14 months to, 70 listings. Now, that can be seen as a little bit of an issue because if there are, huge vacancies online, vacancy rate is 2.64%. If there's huge vacancies, remember tenants have huge options. We want a constricted supply. The story that this data is telling me at the moment is that it is quite a balanced market. It's obviously had its run. However, it still remains affordable, and I'm not seeing anything in this particular data here that tells me that Mildura is going to shit the bed in the short term. It's also not telling me that you're going to see a massive 10, 20% growth run. Who do I think this particular market would be suited? This is a long-term hold sort of market because it's been performing over the last 10 plus years. The stock on market is being taken up by the stock on market is being absorbed by the demand and the activity there. We're seeing that in terms of days on market, stock on market. It is also still affordable. So I can't see how you also get zero growth because you've only got a month's worth of inventory in a market that is still affordable. So I see this as still a steady hold. I know Mildura has done a run. I know Mildura used to be in the 2s and the 3s, and now we're up to high 4s. However, I still think there's some steam left in this particular market, And I don't think it's the worst option. 28 years to own. Not bad. Not bad at all. Now, let's dive into, that's my thoughts on the data, who I think it's best for. Let's dive a little bit more into the particular asset and what, if there's anything we can find out there. For those playing at home, it's an on-market asset, so please don't snake this one. 34 Tulane Drive, Mildura, Victoria. When we look at it on a map and we zoom out, we've obviously got Mildura here. It's located probably in the southwest portion of it. Itself, it's not on a main highway, which is great. We've also got Mildura Central down the road, which is all your amenities that you can ask for. You know, Woolies, Kmart, Mildura Central, Coles, all that sort of thing. Perfect. We've also got our industrial complex there with some other shops, blah, blah, blah. Bunnings, fantastic furniture. It's a short drive from it. We've got an oval here, and usually it's an issue if we're backing onto the oval. We've got a little bit of grace there where that's street back. And I think the main people, that actually may not be an oval, sorry. That might be a block of land, judging by that house there. Couple of little tracks and stuff like that. However, what this actually is, I don't think this is an oval, sorry. I think this is a lot that someone owns because we've got continued streets here. So potentially the council has left it there waiting for, those roads to be continued and some housing to be, put out in there. The asset itself from an aerial view, normal suburban street, which is cool. No major red flags in the street at the moment. Let's look at Google Maps. Now, unfortunately, the last time that Google Maps was down and around this street is 2015. You have to always double check that. So we can't rely on this, what we're seeing here, too much because it is such a long time ago. That's that pasture of land, potentially more supply coming onto the market in future. We have a couple of assets on the front lawn, potentially water meter, electrical box, pit, stormwater. Not a huge issue, I don't believe. Now, obviously, something like here next door has two of those assets. It's not, do I see it as a big issue? Not really. The house itself looks okay in Google Maps and has not changed too much apart from a bit of lawn care, which is great to see. Light posts, families do love curb gutters and lamp posts for security and all that kind of stuff. And again, 2015, there's not too many red flags we're seeing from the street. So let's dive into as well the listing online. So this is the particular listing. It's guiding 490 to 550, decent block size, 322. We like that. It's currently leased until mid-2026. So one thing I just want to be checking and seeing is how much it's leased for. Now, little tip I'll give you guys is that if it's under leased, it's actually, I see it as a positive. And the way you're going to know it's under leased is if you've done your market research in these pockets, right? And why I think that's a good thing is, let's just say it's leased out for $400 a week. The novice investor is going to come forward and say, oh, $400 a week, I'm just going to work out the yield quickly. If we buy it for say $550, people are going to look at that and say, oh, it's a 3.7% yield. But if you know and you've done your research and that can rent out for $560, $580, $500, then you know that, oh, I've got a shortfall over the next 9 months, but I can then bring it up to market rent. And that will turn a lot of people away. A 3.7% rental yield, people will be like, oh, it's not great. However, if it can rent for $500 and I buy it for $550, we're up to a 4.7% yield, which, my friends, for Victoria is pretty decent, 4.7%, almost at 5% yield. Let's look through the photos as well. Very interesting color choices. Melamine bench tops, solid kitchen, tiled throughout, low maintenance. Light colored carpets, not great for property investors, but will settle. No real issues with the bathroom that I can spot. Bedrooms, standard. Ducted aircon, we like that. Not too many issues we can see on that. Always get a building in pest regardless of how clean you think it looks. Bit of an al fresco area. Decent backyard. Aircon, cool. Sturdy brick construction. So the good thing about something like this is you've got brick construction, you've got the data saying that this is a long-term performer. So this will just be a buy, hold, set, forget. In terms of layout, open plan living, dining, kitchen, which we like. Primary bedroom and 2 others off there. We've got a bit of storage, laundry, separate, no huge issues with the layout. We've also got a patio, which is cool. And that's particularly it. I don't see any red flags, if I'm being completely honest. One thing as well that I'll check. So I'm just checking the housing map here in terms of the public housing rates. And as you guys will see, this is that parcel of land that I thought was originally a park. And this is Tulane Drive here. What you'll see in terms of housing types there's 0 public housing. Private rentals, 30%, owner-occupied 27% are privately owned, 72% owner-occupied appeal. So we obviously have a lower ratio in terms of renter to owner ratio compared to the data of the suburbs. So it tells me that there's more owner occupiers in there, which is great, which is what we want. We want to be in and amongst those type of guys. If I zoom out, into other pockets of Mildura, look, there's sections here that are 58 public housing. We're a decent distance away from that for that not to be an issue for me personally. A couple of other little pockets in their 20s, but yeah, I'd avoid that patch, but we're so far away, which is cool. So passes that test. When I go through and just look at my planning layers, there's nothing new or different around the zoning compared to everywhere else in the average vicinity. There's no sort of cultural heritage. There's no bushfire overlay. Nothing in terms of flooding, transport, easements. No real issue across the back boundary. Pretty standard. So no huge red flags jumping out at me, to be honest. The one thing that I would want if I was purchasing this for a long-term hold, and don't get me wrong, brick construction, really good. So if I look into potentially just some houses that have sold in the area, I also want to look at just the 3-bedders that have sold. Always go last 12 months. Oh, it's this bug with realestate.com again. Last 12 months. So, last 12 months, same street, 515, 322, comp-wise. Very similar construction. Kitchen, tiles throughout, outdoor patio. My shed, 18th of October 2024. So, that's the one with that's got a granny flat. So, it's a 2-bedroom house, I believe. Yeah, 2-bedroom house and granny flat. So, hard to take that as a direct comp just because it's got a granny flat. 322, 596. So I just go through and sort of see where we're at. 322, 520. Relatively, maybe fraction newer construction, this one, but same sort of typology. Some built-ins. Show me I hate when they don't put a floor plan in there. 520. Now, I know there are quite a few buyers agents buying in these sorts of areas, so it'd be interesting to see what this one sells for. 311 for 520. Very interesting. Probably a bus stop out the front. Not ideal. 520, 322. So it's telling me when are these dates? May 2025, 322575. Pretty similar construction. I won't go in and do a full piece by piece, but I'm just trying to get an understanding for this pocket. I'm not going to look at that one. What are these selling for? 580s, 580s, 590s, 610s. So I wouldn't be surprised, 520, 3-bed, 1-bath. I wouldn't be surprised that the agent has put, the agent's guiding that. I believe that this probably will achieve the higher, if not more, higher side of this particular deal. One thing as well to look at, especially with the rentals and what I picked up, remember when we looked at the data on this one? Remember when we looked at the data and we saw there was 70 rentals online? One thing to look out for and filter in with the demand of Mildura was 3 bedrooms, right? And people can get caught up on vacancy rates because they go, vacancy rates are through the roof. But what you got to check as well is what type of houses are vacant. Because you can have a high vacancy rate, but the high vacancy rate could be 4-bedders, which in this case, we've checked the demand and seen that the demand is only for 3-bedders, which would make sense. So if we're going to be buying a 3-bedroom where we know there is high demand, we can expect to have a lower vacancy rate compared to the ones that are online, which are the 4-bedrooms. Does that make sense? So if I say 3 bedrooms and I say a house for rent, and I just search off that. Now, my house is down here. I got 580. Very similar finish throughout. 580, that's a corner block, so there's actually less privacy in that one. So I want to just see, and one thing I would do if I'm buying this is I want to check and speak to the local property managers on the ground. We know that this particular section is got a great ratio of owner-occupiers in it. I just want to talk to them and find out what are the non-negotiables. What do I need in my investment property that is going to have people scrambling over it? Because there's 70 online, there's 70 properties. If I'm doing 3 bedrooms, here I've only got 43 bedrooms in the majority of the Mildura area. If I zoom out more, there's 60. So in this particular pocket, there's 20 properties. I just want to go through and see what are the non-negotiables. What do I need to have in my investment property? Now, it could be a price thing, and the property managers are going to be the people that tell you. And if you're watching a particular market, you're going to be watching how quickly things rent for. So it could be because all these ones are overpriced and I need to come in at 520. But if I'm coming in at 520, compare it to this one here, pretty similar throughout. So, 520, 520 a week, times it by 52, 27. Now, let's say that that's going to be on a 580 purchase because we know that the market's going through the 4.6% yield. Not bad for Victoria, and obviously something to really keep your eye on. But that's probably to summarize this deal, who do I think it is for? This is a balanced market. I wouldn't expect heaps of capital growth at the front because we don't have a restricted supply and we don't have overly heaps demand, but the market is absorbing what is for sale and it is an affordable market. So I believe that we will still see some sort of consistent price growth in this market. So it's somebody that's going to want a long-term hold that does relatively well, that does consistent performer. The one thing that you want to make sure, I think, if you're buying this Mildura, just because of the market size and the amount of vacancies, although it's not an issue, I think personally, because you have 20,000 dwellings, I just want to get super dialed in on what my IP needs in order to attract tenants and not sit on the market for a very long time. I have seen in that one of the issues could be, if I look at this just quickly, right, this particular pocket is, so let's take this particular pocket. There's 20 properties. If I was to change my filters and include 4 and 5 bedrooms, it goes up to 36. So almost half of this rental supply in this pocket of Mildura is a asset type that I know is not in high demand. So I know 3 bedders, but I need to talk to my property manager. See, is it the second bathroom? Because that dwelling did have it. Or is it needs a bath, it needs a backyard? What does my property need? And what are the people on the ground screaming for so that it can get rented out quickly? Is it just a price thing? Do I need to readjust my expectations on price? Or is there something else that I can look for? That's what I would do. That's who I would be, who I think it would be suited for. The one that's on market, I hope you haven't paid sort of a buyer's agent to send you something that's on market. Look, best luck with this one. I think it is priced quite low. We've looked at a couple of comps. We haven't done it too much, but I think you expect to see the higher range or above, definitely in that price bracket of what that was trying to sell for. So if I'm taking a stab in the dark, I'm saying that this is probably selling for over 550. If you can get it for under 550, perfect. But it doesn't just a couple of those comps selling north of that. I think the agent may have priced this one a little bit low, but keep me updated. Let's see. We'll do a check back in when this one sold. It was added to the market 6 days ago. So yeah, look, really appreciate this submission and questions, thoughts, comments. Even if you disagree, chuck it in the comments and happy to have a conversation about it if you are respectful, of course. As always, guys, thank you so much, and I'll see you tomorrow.